Today we're tackling a crucial question that many professionals face. Do you need a PLLC instead of a standard LLC? Now, if you're a doctor, lawyer, architect, accountant, or any other licensed professional, this decision matters significantly for your liability protection, tax situation, and even your professional standing. In the next few minutes, I'll break down exactly what a PLLC is, how it differs from a standard LLC, and how to help you determine which one is right for your specific profession and situation. No confusing legal jargon, just clear, actionable information that you can use. So without further ado, let's dive in. Here's what we're planning on covering today. First, I'll explain exactly what a PLLC is and how it differs from a regular LLC in terms of formation, structure, and purpose. Then we'll explore which professions typically require a PLLC structure and why certain states mandate this specific entity type for licensed professionals. We'll also examine the liability protections that each entity offers, including the critical differences when it comes to malpractice and professional negligence. And don't worry, we'll even definitely cover the tax implications and potential advantages of both structures. At the end of this video, you'll understand whether your profession legally requires a PLLC in your state, as well as the specific liability protections that comes with it. Let's start with the basics to make sure we're all on the same page here. A standard LLC, or limited liability company, is a business structure that protects your personal assets by creating a separation between you and your business. If your business gets sued or falls into debt, your personal home, car, and savings are generally protected. A PLLC works very similar here, but it's specifically designed for licensed professionals, people who need state-issue credentials to practice what they do in their business. We're talking about doctors, lawyers, accountants, architects, engineers, and other regulated professions. Now, why does this distinction even exist in the first place? The truth is, it comes down to public protection. States want to ensure that when you visit a doctor or hire an attorney, these professionals can't simply hide behind a business entity if they provide negligent services. Think about it this way. If you're running a coffee shop as an LLC and someone slips and falls, your personal assets are protected. But if you're a surgeon who makes a critical error during an operation, should you have the same level of protection? The state licensing boards and legislators don't think so. And that's where PLLCs come in. The rules vary significantly from state to state. In some states like California are extremely strict about requiring professional entities, while others offer more flexibility. Your profession's governing board often has additional requirements that you need to pay attention to. Before we dive deeper into that though, it's important to note that neither entity, LLC or PLLC, completely shields you from malpractice claims. That's a misconception that I see all the time, and it's one that we'll clarify as we go through today's video. Now, before we dive deeper into the specifics, let's address some important limitations that you should keep in mind when deciding between a PLLC and an LLC. The first of these limitations is state regulations aren't just suggestions, they're mandatory. If your state requires licensed professionals in your field to operate as a PLLC, you don't have the option to form a standard LLC. Ignoring these requirements could potentially result in penalties, licensing issues, or even business dissolution. Secondly, neither structure provides complete liability protection. This is crucial to understand because while both entities shield your personal assets from general business debts like unpaid rent or vendor disputes, neither fully protect you from malpractice or professional negligence claims. You'll still need robust malpractice insurance regardless of your business structure. And third, if you're planning to practice across state lines, be aware that PLLCs formed in one state may face significant hurdles operating in another state. Each state has their own requirements for professional entities, and you may need to register as a foreign PLLC and prove that all members hold appropriate licenses in the new state that you're operating. And fourth, PLLCs generally have stricter ownership restrictions. If you're planning to bring on investors or partners who aren't licensed in your profession, a PLLC might not be viable since most states require all members to hold active licenses in the relevant field that they're practicing. And finally, while both entities offer tax advantages, PLLCs typically have less flexibility regarding where they can be formed in the first place. A standard LLC might be able to incorporate in a tax-friendly state like Wyoming or Delaware, but PLLCs usually must be formed in the state where they're actually practicing business. Keep these limitations in mind as we explore each entity type in more detail now. Now, the first thing we're going to be considering here is regulatory and licensing requirements. A PLLC isn't just another business structure. It's specifically designed for professions that require state licenses. If you're a lawyer, doctor, dentist, architect, accountant, or engineer, your state might mandate that you operate as a PLLC rather than just a standard LLC. For example, in California, the Moscow-Knox Professional Corporation Act requires licensed healthcare providers operate under a professional corporation or PLLC. Meanwhile, in Texas, if you're an architect, you can form a PLLC, but all members need to hold valid architectural licenses. The verification process is rigorous here. When forming a PLLC, you'll typically need to submit proof of your active license, like a copy of your state bar certificate if you're an attorney, directly to the Secretary of State. Some states also go even further than this. In Florida, for example, you might need to provide additional affidavits signed by licensed professionals confirming your credentials' credibility. Your professional board also adds another layer of requirements. The American Institute of Certified Public Accountants requires that CPA firms structure as a PLLC or professional corporation in most states that they operate. State medical boards and bar associations have their own specific entity requirements. The key difference here is that you need to check two sources before deciding: your state's business formation laws and your profession's governing board rules. If either one of those mandates that a PLLC is necessary, that's what you'll have to go with. There's really no workaround here. Now let's address one of the biggest misconceptions about PLLCs and LLCs: the liability protection that they actually provide to you. Both entities do shield personal assets from general business liabilities. If your business can't pay its rent and a vendor ends up suing you over an unpaid invoice, or your business defaults on a loan, your personal home, car, and savings are typically protected regardless of whether you have an LLC or a PLLC. But here's the critical distinction that many professionals end up missing: neither structure fully protects you from malpractice or professional negligence claims. Let me give you some real examples here. If you're a surgeon operating as a PLLC and you make an error during a procedure, you remain personally liable for that surgical mistake. The PLLC doesn't shield you from your own professional negligence. Similarly, if you run a marketing firm as a standard LLC, or you're a graphic designer that infringes on someone's copyright, both the designer and potentially you could be personally liable for that professional negligence, even when the LLC structure is in place. This is why malpractice insurance is absolutely essential, regardless of your business structure. Now, the premiums vary drastically by profession. A therapist might pay $5,000 to $15,000 annually, while a neurosurgeon could pay $30,000 to over $100,000 for adequate malpractice coverage. Now, one of the things that your PLC or an LLC does protect you from is the malpractice of your colleagues. If you're in a group practice and your partner makes a professional error, your personal assets are generally protected from claims against them, although the business assets still might remain at risk. The bottom line here is that don't form an LLC or a PLLC thinking that it replaces proper malpractice insurance. These entities complement your insurance coverage, but they don't substitute for it. The next consideration we'll be looking at is ownership and structural constraints. Let's talk about who can actually own and operate these entities, because this is where PLLCs and standard LLCs really diverge. With a PLLC, most states impose strict membership restrictions. Typically, all PLLC members must hold active licenses in the profession that the business practices. For example, if you form a dental PLLC in Virginia, every owner must be a licensed dentist. You can't bring in your entrepreneurial friend or a private investor as a part owner if they don't have proper credentials. Standard LLCs offer much more flexibility here. You can have a mix of active practitioners and passive investors. A technology consulting LLC could have both licensed engineers and non-licensed business partners or investors even as members. This makes standard LLCs ideal for raising capital or bringing in business-minded partners who don't share your professional license. The ownership restriction has real implications for growth and succession planning. If you're looking to eventually sell your practice or bring in outside investment, a PLC structure might limit your options. Interstate practice also adds another layer of complexity here. If your Colorado-based therapy PLLC wants to expand to Arizona, for example, you'll need to register as a foreign PLLC in Arizona and demonstrate that all members hold Arizona licenses. This can create substantial barriers to geographic expansion that standard LLCs don't really face. The operating agreement for a PLLC also requires very special provisions. You'll need specific clauses addressing what happens if a member loses their professional license, ensuring that membership can only be transferred to other licensed professionals, and potentially including buyout provisions if someone needs to exit the business due to licensing issues. These ownership constraints are a major consideration, especially if you have long-term plans for growth, outside investment, or even eventual sale of your practice. And the last big consideration here is tax implications and optimization strategies. When it comes to taxes, PLLCs and LLCs share many similarities, but there are some important nuances that you should understand that could save you thousands each year. Both entities default to pass-through taxation. This means that the business itself doesn't pay income taxes, but instead profits and losses pass through to your personal tax return. This avoids the double taxation issue that many corporations end up facing. However, However, PLLCs often lack the flexibility to domicile in tax-advantaged states. Here's a practical example for this. If you're a consultant with a standard LLC, you could form a new entity in Delaware to avoid New York's $4,500 LLC publication fee, and also take advantage of Delaware's business-friendly Court of Chancery. But if you're a psychologist in Texas, you must form your PLLC in Texas, which is going to subject you to business and state taxes, which can often be a little bit higher than an actual state that you want to actually incorporate in. One powerful tax strategy here available to both entity types, however, is the S-Corp election. By filing IRS Form 2553, you can elect S-Corp tax treatment for your LLC or your PLLC, which can yield significant self-employment tax savings. Now, you might feel like you understand the difference here and need to make a decision on whether you want to go with an LLC or a PLLC. The best way to go about doing this is to not do it yourself. This can cause a ton of headaches if you make mistakes, and although it may seem like a cheaper option in the first place, trust me, I've had experience with this. Going with an LLC formation service is always cheaper, faster, and just easier. The best service that I'd recommend you going with, whether it's a PLLC or an LLC, is to use the link down in the description below for Northwest Registered Agent. When you click that link, you'll be brought to a page here where you can start forming your LLC or your PLLC for as little as $39 plus your state fee. All you have to do is hit the Get Started button, and Northwest Registered Agent will walk you through step-by-step setting up your new LLC corporation or your PLLC. It'll guide you through every single step and make sure that you're not making any mistakes. They'll get you set up with your articles of organization, your statement of information, as well as an operating agreement and even an EIN number so you can start setting up your business bank accounts. If you guys want to get started with Northwest Registered Agent, make sure you use that link down in the description. If you guys have any questions about this process, I'd love to hear about them down in the comments section. Make sure to hit that like button and subscribe so you don't miss any of our future videos. Other than that though, that's pretty much all I have for you guys today. Remember that the links down in the description are affiliate links, and they do go towards supporting more videos just like this one, so thank you in advance for supporting our channel. Hopefully you guys enjoy this one, and I can't wait to see you guys in the next video.